So this lesson is going to be on rejection block. So a rejection block is simply an area or level in price where there is a failure to break on two or more attempts, and then it leaves long tail of rejection wicks. And then after this, price moves aggressively away from that level. So characteristics of a rejection block: candles body are equal. Okay, where the candles, the bodies are closing, they are equal, and then it has long rejection wicks on top. Okay, normally the move after the rejection is strong and with momentum, and then when it breaks market structure, it is even the perfect scenario for us to engage price when it returns into that level. Let's get into some examples of a bullish rejection block. So let's look at this pocket of price action here. You can see this bearish candle and then this bullish candle. You can see how the bodies are equal, okay, and they have rejection below it. Okay, they have rejection below it, and then you can see an aggressive move that leads to the break in this market structure. Okay, so in marking your rejection block, you mark it from the bodies, okay, the bodies and the last end of the rejection. So this entire space is your rejection block, and you can see that price returns into that area and moves away. Okay, so this is an institutional reference point where we can engage price when traded too. Now let's look at this example as well. See this candle, this bullish candle and this bearish candle, the bodies, they are equal. See how these bodies on this line, they are all equal with long tails of rejection, right? And after that, it moves aggressively away from this level and then breaks market structure. So for your rejection block, you're going to mark it from the bodies, okay, where the bodies are ending, to the last area of the rejection. This entire space is your rejection block. So after the break in market structure, you see smart money returns into that area and accumulates more buying opportunities, okay, more buying positions. Okay, so that's your rejection block. Let's look at a bearish scenario. For a bearish scenario, let's see, you see that these two candles, they have equal bodies with long tail of rejection, followed by aggressive move to the downside, break in market structure. So marking your rejection block, you mark it from the bodies to the last wick. Okay, I and A here, but this is the last point of the rejection. So that entire space will be your rejection block. Smart money returns into the area right here, and then they sell off. They come and tap into it one more time and sell off. Okay, so these areas are very powerful areas in price where we can engage our positions. One more example: these two candle bodies, equal, rejections at the top, break in market structure, price returns into the rejection block. The bodies of this candle, the last rejection high, this space is your rejection block. Smart money returns back to the area and sells off. Okay, so this let's look at this example as well. Equal bodies, long tail of rejection, aggressive move to the downside, break in market structure. Smart money returns back to the rejection block, and then they sell off. So this will be all for rejection blocks. They are very powerful to incorporate in our trading model. Price would not always just go away from other blocks. Sometimes it will go past the other block and go all the way to the rejection block. Okay, so thank you. Your assignment will be to go back to old data or charts, look for areas where these rejection blocks were formed, the break of structure, how price returned back into it, and how price moved strongly away from the area.